Hi everyone. Welcome to today's pre-market live analysis brought to you by IC Markets. Right. Before we start, let's take a quick look at the disclaimer. Right. Please take note that this is marketing communication and does not contain and should not be construed as containing investment advice on investment recommendation or an offer of or solicitation for transactions in financial instruments. Right. Also, take note of the risk warning that comes to trading forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, let's take a look at what's up on the calendar for this week. Right, as you can see, there's quite a few things going on. Right, we've got a hat trick of central bank announcements along with US consumer inflation sandwiched in between. Right, hi Nick, great to see you as well. Right, good to be back. Alright, so as you can see, starting off on Tuesday, 10th of December, we've got the RBA, or the Reserve Bank of Australia, releasing their monetary policy statement, as well as Governor Michelle Bullock delivering her press conference. That's going to be on Tuesday, 10th of December. On Wednesday, 11th of December, we've got US consumer inflation data, followed by another central bank announcement, but this time will be by the Bank of Canada. And then on Thursday, we've got two major European central banks, the Swiss National Bank and the ECB, releasing their respective statements, as well as the respective chiefs, central bank chiefs, delivering their press conferences. Right, so you can see here it's a fully packed calendar, right? And and apart from those three central bank announcements, as well as US consumer inflation data, we also have CPI and PPI data out of China later today. That's on Monday, 9th of December, 1:30 a.m. And you can see here, on Tuesday, 3:30 a.m., the RBA is expected to maintain their cash rate on hold once more. Right, they're expected to maintain the cash rate at 4.35%, followed by Governor Michelle Bullock's press conference at 4:30 a.m. So we could potentially see the Aussie, depending on how hawkish the statement and the press conferences are, right, we could potentially see the Aussie stabilize on this day as well, or perhaps even receive a nice little near-term boost. Right, and then on Wednesday, and also take note, we've also definitely going to inject much higher volatility for crude oil prices. And then on Wednesday, 1:30 p.m., US consumer inflation data will be released, and we can see that on a monthly basis, headline CPI is expected to increase 0.3%, while the annualized reading is expected to increase to 2.7%, from 2.6%. So you can see inflation seem to be picking up once more, right? And should we see a set of data that perhaps comes in higher than the respective forecast, we can probably expect the dollar to receive another near-term boost should that take place. Right, and a little while later, right, we've got the Bank of Canada releasing their overnight rate, where they're expected to make a 50 basis points cut down from 3.75% to 3.25%, followed by the press conference by Governor Tiff Malcolm later. So we could definitely expect the loonie to come under significant selling pressures on this day, and which would potentially cause the dollar CAD to continue to rise higher. And then on Thursday, right, we've got two central bank announcements out of Europe. Right, we have the Swiss National Bank up first at 8:30 a.m., where they are likely to move ahead with another rate cut. I believe this would be the third or fourth consecutive rate cut by the Swiss National Bank. Right, this another 25 basis point cut to bring it down to 0.75%. And then at 1:15 p.m. GMT, the ECB is expected to make a 25 basis points cut as well, right, bringing down their main refinancing rate from 3.4% to 3.15%, followed by ECB President Christine Lagarde's press conference at 1:45 p.m. Right, so we can see the euro, the franc, the loonie, and the Aussie all coming under significant, or all likely to face higher volatility over this week. Alright, so with that, let's dive into the charts and trading view, right? And of course, we'll start the analysis on the dollar index, and then we'll make our way down the major currency pairs. And also, right, Nick, all right, Nick wanted to have a look at Bitcoin as well, right? Yep, Bitcoin and the wider crypto market has seen a lot of interest and a huge moves, of course, since Republican nominee Donald Trump's victory at the US presidential elections at beginning of November, in the first week of November. Right, so we'll start off with the dollar index, right? Then we'll take a look at Bitcoin, and then we'll move on down to the other major currency pairs, the commodities, and of course the indices as well. And of course, should you have any other requests for any of the other instruments, please do let me know, right? Be more than happy to go through the analysis with you. All right, okay, so as you can see here, right, just let's just quickly start on the weekly chart, right? So we can see here from the end of September, right, till mid-November, we've seen almost, I believe it was 8 weeks, 4, 5, 6, yep, 8 consecutive weeks of gains for the dollar index, right, as it stabilized around 100.40 at the end of September, and rising as high as 108.07 in mid-November, right? 2 weeks ago, we saw a huge pullback in the dollar index, right, as it fell from 107.35 or 50 to about 105.75. Last week, right, was pretty much, you could say it was a consolidation week for the dollar index, right, as it opened at around 105.80, rising as high as 106.77 before finally closing at about 105, just under 106, right? So you can see sort of like a consolidation week for the dollar index last week, right? So coming back to the daily time frame here, we can see Friday, right? Friday we had non-farm payrolls that was released in the US as well, which showed job growth rebounding for the month of November, right? If I'm not mistaken, non-farm payrolls added about 227,000 jobs in the month of November, a little bit higher than the forecast of 218,000, right? So although the unemployment rate edged a little bit higher from 4.1% to 4.2%, right, that increase was in line with market expectations. So we saw a nice rebound in jobs growth on Friday, and that's quite likely, and that's part of the reason why we saw the dollar index here on Friday close in the green as well, right? If you look at it and the 30-minute chart, on the 30-minute chart, right, non-farm payrolls were released on Friday, 6th of December at 13:30 p.m. 1:30 p.m. GMT time, and you can see the dollar index stabilized at around 105.60 before reversing to rise very strongly, briefly surging past the 106 level before closing just underneath it by the end of Friday's session. So you can see here non-farm payrolls, right, the nice rebounds in jobs growth created higher demand for the dollar once more, causing the dollar index to reverse quite sharply and rising past 106.10, rising past 106.10. Right, so we can probably expect this demand for the US dollar to remain intact, right? We can probably expect demand for the US dollar to remain high as well. All right, hi Costas, great to see you. Yep, we can definitely cover gold, euro, and dollar franc as well, right? We'll just start off with the dollar index, quickly touch on Bitcoin, and then move on over to the other major currency pairs, right? So because we had a nice rebound in non-farm payrolls last Friday, we can probably expect demand for the dollar to remain high, to remain elevated, and that's quite likely going to cause the dollar index to continue rising higher this week, right? At today's open, it's quite likely we could see demand for the dollar remain elevated, pushing dollar index up towards its pivot here at 106.47. This pivot here we can see is like a nice little resistance. Here we can see since Monday 2nd of December till Wednesday 4th of December, and we can see the dollar index stalling at this level here, right? Stalling around this level here. And this is also where we have a 38.2% Fibonacci retracement as well. This retracement level was found right from this swing high here on Friday, 22nd of November, going down to the low of last Friday. And we can see that the 38.2% retracement level also aligns pretty well with this little pullback resistance level here that has taken place last Wednesday, right? So the pivot is a little resistance here that is accompanied by a Fibonacci retracement at 38.2%. So we're quite likely to see the dollar index rise up towards this pivot level here, and especially on Tuesday, right? On Tuesday, if we do see US consumer inflation come in hot, we could see this pivot level being tested once more, right? Resistance is at 107.49. It's a swing high resistance that has taken place here on Friday, 22nd of November. And first support is at 105.15, right? That's a nice overlap level, right? Overlap support level, right? That has been in place since Tuesday, 9th of July, right? You can see a little bit of support here since 19th of June, resistance on 9th of July. We can also see support here on 3rd of July. Then we can see resistance here for a couple of days, right? Resistance for a few days from 6th of November till the 8th of November, right? So this creates a nice overlap level, right? That also has the presence of a 38.2% Fibonacci retracement, right? So this retracement level was found starting from this swing low on Friday, 27th of September, going up to this swing high here on Friday, 22nd of November. So that's how the first support level for the dollar index at 105.15 has been identified. So remember, just a quick recap, we had better than expected non-farm payrolls on Friday, right, which caused demand for the dollar to increase, causing dollar index to reverse from 105.40, surging as high as 106.15 before finally closing just under 106 last Friday. So we can probably expect demand for the dollar to remain elevated, driving it higher towards the pivot level, which is at 106.47. And also we've got US consumer inflation data coming up on Tuesday, and should we see another hot print, we could likely see this pivot level being tested quite significantly on Tuesday, 10th of December, right? Okay, so these are the key levels for the dollar. Here, remember, I'm on a daily time frame, right? Let's quickly look at Bitcoin, right? Nick wanted to have a look at Bitcoin as well, and then we'll move on over to the other major currency pairs, and of course we'll take a look at gold as well. Alright, so taking a look at Bitcoin here, and we can see on Thursday, 5th of December, it made a new intraday all-time high at about 104,030, right, before reversing quite sharply the following day, dropping as low as 92,200, right, last Friday. Right, since then, right, Bitcoin has recovered as well and seems to be elevated, right, over the weekend, right. It hovered at around 100,000 on Saturday and Sunday, and we could potentially see this crypto or this coin pull back a little bit, right? Take note, it was in the red earlier, right? On for Sunday, 8th of December, this candle was in the red as well. So I was expecting Bitcoin to perhaps consolidate a little bit more, maybe drift lower towards the pivot level, and then before reversing to stage a rebound, right? This pivot level here is a pretty decent support level that has taken place, that has been in place since Thursday, 28th of November, right? We can see support, Bitcoin finding support here on Thursday, 28th of November, then over here for a period of 3 days as well, from 2nd December till 4th of December. But of course, we see this wick dropping as low as 92,200 here. But generally, this level here can be a pretty decent pullback support level, which is also accompanied by a Fibonacci retracement at 61.8%. Right, this retracement level was found starting from here, this swing low on the 26th of November, going up to the intraday all-time high that was formed on Thursday, 5th of December. So that's how this 61.8% retracement level was found. In terms of the first support, right, the first support is a pretty decent overlap level at 91,855. We can see Bitcoin previously running to resistance at this level in mid-November, after which it proceeded to function as a very nice swing low support at the end of November. And of course, we can see on Friday, 6th of December, Bitcoin bouncing off this level once more, right? Bouncing off this level very strongly once more. So this creates a very nice overlap level, which is also accompanied by Fibonacci retracement at 23.6%. This retracement level was found, this 23.6% retracement level was found starting from this swing low here on Monday, 5th of August, going up to the intraday all-time high that was formed on Thursday, 5th of December. Right, and in terms of resistance, remember, we have no other resistance levels that we can reference, right? There's no swing high resistance or overlap level that we can reference. So in this case, we've relied on a Fibonacci extension at 161% to help us identify the next potential resistance barrier for Bitcoin. Right, so this extension level was found by running a retracement from here, this high on Friday 22nd of November, going down to this swing low here on Tuesday 26th of November, and we can see that the 161.8% Fibonacci extension level sits at $105,411 here. Right, we can see the candle now sort of fluctuating between white and green. Right, so I think Bitcoin could drift a little bit lower, and if it does head south, it's quite likely it's going to find support at around the 61.8% Fibonacci retracement, which is also a nice little pullback support level at 95,138. All right, so with that, let's move on over to gold. All right, sure. Okay, let's move on over to gold as well right now. Okay, so we can see the intraday all-time high for spot gold prices was made on, let's see, which is the highest point. Is it Wednesday, 30th of October? Yep, it is Wednesday, 30th of October. That's when the intraday all-time high was made. So the intraday all-time high for spot gold prices was made on Thursday, 30th of October at $2,790 per ounce, right? We can see gold has had a very strong run-up since October of 2023, right, where it was as low as $1,820 per ounce, and it's pretty much gone in a straight line since then, right? It's risen as high as $2,780 here. So this move, right, we can see in a matter of nearly a year, right, we've seen gold prices increase more than 54%, right, just about 55% in 1 year, right? Huge move in gold prices over the past 12 months. Right, but after making this intraday all-time high at the end of October, right, we saw gold prices reverse quite sharply, right, before stabilizing at around $2,560 per ounce in mid-November, staging a nice rebound until in the third week of November, before it ran into resistance once more at around $2,715 per ounce. Since then, right, or rather since Tuesday, 26th of November, gold prices have just hovered above $2,620 per ounce here. So we can see that demand for although gold prices have retreated from its intraday all-time high, but we can still see that this precious metal remains elevated, right? It still remains elevated, right? And here at around $2,630 per ounce here. So we could see demand for gold remain strong as well, pushing it up towards its pivot here. The pivot here is a nice little swing high resistance that has taken place on Friday, 22nd of November, right? We can see gold prices stalling at around $2,720 per ounce and falling sharply on Monday, 25th of November. Since then, it has sort of consolidated around this level here, and we could see demand for gold remain intact, pushing it up towards this pivot here at $2,715. First resistance, of course, is simply going to be the intraday all-time high that was formed on Wednesday, 30th of October, and the first support is this nice swing low that has taken place here in mid-November. This swing low support level is also accompanied by Fibonacci retracement at 23.6%, Right, it's nice swing low support here, accompanied by the 23.6% Fibonacci retracement. And this retracement was found by running a retracement starting from this swing low on Friday, 6th of October 2023, going up to the intraday all-time high on Wednesday, 30th of October. So that's how we found this 23.6% retracement. Right, okay, so let's see. Nick Costas also wanted to look at the euro and dollar franc. All right, of course, because we've got, remember, we've got three major, is it three? We've got four major central bank announcements, right? We've got the RBA coming up tomorrow, Tuesday, 10th of December. So definitely going to take a look at the Aussie. We've also got the Bank of Canada on Wednesday. So dollar CAD will be in focus, and on Thursday we've got the Swiss National Bank and the ECB. So we'll be taking a look at dollar franc and of course the euro, right? So let's maybe perhaps move in chronological order, right? Since we've got RBA releasing its statement tomorrow, Tuesday, 10th of December. So let's take a look at the Aussie. Then we'll take a look at the dollar CAD, and of course then dollar franc, and finally the euro, right? So you can see here with demand for the dollar being strong since the end of October, right, with demand for the US dollar being strong since the end of October, sawing dollar index rise from about 100.40 all the way as high as 108.07. Of course, over this period, we can expect the other major currency pairs to head in the opposite direction, right? So Aussie has reversed from around 69 cents, dropping under 64 cents last week. So as we can probably expect today, as markets reopen, for the Aussie to continue to slide lower, right? And then on Tuesday, the RBA is expected to maintain its cash rate at 4.35%, and that could provide some near-term support for the Aussie. So perhaps on Monday, right today, we can expect the Aussie to continue to slide lower. But on Tuesday, with the release of the monetary policy statement, followed by RBA Governor Michelle Bullock's press conference, we could perhaps see the Aussie stabilize around the pivot at 63.50 and stage a near-term rebound, right? So this is what we are probably expecting for the Aussie, right? On Monday today, it's probably expecting it to continue to slide lower, and then on Tuesday with the announcement of the statement and the commencement of the press conference, we can probably expect the Aussie to stabilize around the pivot at 63.49. Now this pivot level here is a multi-swing low support, right? We can see the first swing low support taking place on November 2023, right? And then the second swing low support taking place here in April 2024, and the third swing low support taking place here in August, where you can see a nice multi-swing low support level that's also accompanied by a Fibonacci projection at 78.6%. Now this projection level was found, right, starting from let me see, how did we find this projection? Oh, right, there we go, from here, right, starting from point number one on 7th of November, going down to point number 2, 14th of November, and ending at point number 3, which is 25th of November. So we can see the 78.6% Fibonacci projection aligned very well with the multi-swing low support that has been identified as the pivot. And we can also see that the 100% Fibonacci projection aligns very well with the first support at 62.95, which is also another multi-swing low support that's been in place since 3rd of October. Right, we can see like almost like a triple bottom here, right? The first swing low being formed in early October, second swing low in mid-October, third swing low in the third week of October, and finally the fourth swing low in the final week of October as well. So very strong support level at 62.94. Right, so you can see here the pivot level at 63.49 is a multi-swing low support that's accompanied by a 78.6% Fibonacci projection, and at the same time the first support is also at 62.94, is also a multi-swing low support that's accompanied by a Fibonacci projection at 100%. Right, in terms of resistance, right, the first resistance for the Aussie is at 64.48, which is almost like an overlap resistance level. That's at 6th of November, and then finally on 2nd December, before running into resistance last Friday at 6th of December. So that creates a nice overlap level. That has the Fibonacci retracement at 23.6%. All right, so these are the key levels for the Aussie. So let's move on over to the Kiwi. Sorry, we've got the Bank of Canada coming up right on Wednesday. So let's take a look at the dollar CAD. Right, sorry, let's take a look at dollar CAD. All right, so we've covered the Aussie. Now let's take a look at the dollar CAD. Right, since we've got the Bank of Canada releasing its monetary policy statement, right, where they're expected to cut the overnight rate by 50 basis points. So we can probably expect the loonie to come under pretty strong selling pressures on this day, and it's quite likely going to cause the dollar CAD to remain elevated as well. Right, we can see the dollar CAD has risen very strongly since the end of September. Right, we can see that it stabilized at around 1.3435 in the third week of September, before rising as high as 41.78 by the end of November here, and it looks to be making another run towards this level last Friday. Right, remember last Friday we had strong non-farm payrolls being reported in the US, which saw demand for the dollar surge once more, causing this currency pair to break past 1.40, right, and to rise and also rise above 1.4150 as well. Now you can see the dollar CAD has risen more than 5.5% since the end of September, right? A huge strong move for this currency pair here. It is rising strongly, right, towards Fibonacci projection at 100%, right? This Fibonacci projection at 100% was found starting from 0.1, 6th of November, going up to 0.2, 15th of November, and ending on 0.3, which is 25th of November. Right, so this 100% Fibonacci projection level is where the pivot has been identified. And if we were to zoom out a little bit, we can see that this pivot level here is actually on. We'll have to head on over to the weekly chart to see this. We can see that this pivot level is also a sort of a resistance barrier here, right? Sort of like a pullback resistance level here that has taken place on 6th of April 2020 and again on 20th of April 2020. Right, this is a pretty decent resistance barrier that's accompanied by a Fibonacci projection at 100%, and the first resistance at 1.4355 is this significant swing high resistance that has taken place in March of 2020. So we can see dollar CAD, right, has risen very strongly over the last few weeks, right, and is testing levels, right, and is approaching levels that were last seen almost more than four years ago, right? 1.4230 was last seen in April of 2020, and 1.4360 was last seen in March of 2020, right? So pretty high levels that dollar CAD is trying to race towards. And of course, the first support for the dollar CAD is simply going to be at 1.4093. Right, this level here previously was a nice swing high resistance, right? Dollar CAD previously ran into resistance here in mid-April, right, making a nice swing high resistance. It attempted to break out of this level on Tuesday, 26th of November, but this was a failed breakout, and where it looks to have made a much more cleaner breakout was last Friday, 6th of November, right? So this now resistance barrier can potentially function as a pullback support area at 1.4093, which is where the first support, which is how the first support has been identified. Right, and of course, if the Bank of Canada does move ahead with its 25 basis point rate cut, we can definitely expect this currency pair, the dollar CAD, to continue to rise higher, and we could see this pivot level being significantly tested on Wednesday, 11th of December. Right, and finally on Thursday, we've got the Swiss National Bank and the ECB. So let's take a look at dollar franc, and then we'll take a look at the euro. So the Swiss National Bank is expected to make another 25 basis point cut, right? I believe this would be the third or fourth consecutive rate cut by the central bank, and we can expect the franc to come under significant selling pressures, which would mean that dollar franc is likely to remain supported and climb higher towards the pivot level at 89.41. But even before the rate cut on Thursday, we also have US CPI consumer inflation data coming up tomorrow. Right, that's on Tuesday, 10th of December. And if you see another hot CPI print, that's quite likely going to cause dollar franc to remain elevated and rise towards the pivot at 89.41, which is this mini swing high resistance that has taken place here on Friday, 22nd of November. Right, we see a nice swing high resistance being formed here. And should we see CPI data out of the US print higher than its respective forecast, we can expect dollar franc to rise up towards the pivot level here. And of course, on Thursday, should we see the Swiss National Bank move ahead with its interest rate cut, we can expect the franc to weaken even further, causing dollar franc to definitely test this pivot level here at 89.40. Higher up, the first resistance for dollar franc comes in at 90.39. Right, this is also another swing high resistance that has taken place on 4th of July. Right, a very significant level here, and this is where the first resistance sits beyond the pivot. And in terms of support, there's a pretty decent overlap support level at 87.25. Dollar franc initially ran into resistance here in mid-August, forming a nice swing high resistance. And after this bullish breakout took place on Wednesday, 6th of November, this swing high resistance then proceeded to function as support on Thursday and Friday, 7th and 8th of November. And it looks to have found support once more last Friday on 6th of December. So this creates a very nice overlap level, right? This is a nice overlap support level that's accompanied by a Fibonacci retracement at 38.2%. This retracement level was found starting from this swing low on 6th of September, going up to this swing high here on the 22nd of November. Right, so once again, right, we saw so just a quick recap for the dollar franc. Right, we saw stronger than expected non-farm payrolls trigger higher demand for the dollar last Friday, which is why we saw dollar franc bounce off 87.25 to close at around 87.86. Combined with demand for the dollar remaining intact, right, as Asian markets digest the latest non-farm payrolls report, right, we can expect dollar demand for the dollar to remain elevated, and we can expect dollar franc to continue to climb higher. And on Tuesday, which is tomorrow, if we see hot CPI data out of the US once more, that's likely to add further fuel to dollar franc and pushing it higher. And then on Thursday, with the potential rate cut by the Swiss National Bank, we can expect the franc to weaken even further, and of course that's all going to add up to drive dollar franc up towards its pivot level at 89.41. Right, and finally we have the ECB. Right, the ECB will release its monetary policy statement, where they are also expected to make a 25 basis point cut on Thursday after the Swiss National Bank. Right, so with demand for the dollar remaining strong since last Friday, right? Remember last Friday non-farm payrolls was released, which showed a nice rebound in jobs growth for the month of November. Right, so we can expect demand for the dollar to remain elevated as markets reopen later today. So that would likely mean that the euro is likely to continue to slide lower. Right, it's continue to slide lower towards the pivot level at 1.0480. This pivot level here is a pretty decent support area that's been in place since Wednesday, 27th of November. Right, we can see the euro finding support here several times, right, on 27th of November, 2nd of December till 4th of December, before rebounding quite strongly on Thursday 5th of December here. So this is a pretty decent support level at 1.0481, which is also accompanied by Fibonacci retracement at 50%. This 50% retracement was found starting from this swing low here on Friday 22nd of November, going up to the high of last Friday. So that's how the 50% retracement level was found. With regards to resistance, it is a pretty decent pullback. Resistance level here at 1.0598. Right, we can see the euro, as it was falling sharply in the first 2 weeks of November. It made a small retracement to the upside in mid-November, but it stalled at around 1.0, just under 1.06, and dropping all the way down to 1.0336. Then as it rebounded towards the end of end of November, early December, it once again stalled at around 1.06, and this is where we can see the first resistance for the euro sits at, and it's also accompanied by 50% Fibonacci retracement. This 50% retracement level was found starting from this swing high on 5th of November, going down to the swing low here on Friday 22nd of November. Okay, so this is where the 50% Fibonacci retracement was found. And of course, the first support is at 1.0419. It's this nice swing low support that was formed on Friday 22nd of November. But of course, take note, we can see that this wick here drops as low as 1.0333. Like the euro, right, has weakened considerably versus the US, right? Just alone in the first week of November till the third week of November, this currency pair has lost more than 5.5%, right, just in the last 4 weeks alone. And if you look at it all the way since the end of September, right, this currency pair has lost nearly 7.9% here. So significant depreciation for the euro over the last few months, right? So we've covered the currency pairs that are going to be impacted by the respective central bank announcements, right? We looked at the Aussie, right? RBA will release its monetary policy statement tomorrow on Tuesday 10th of December, followed by the Bank of Canada. So let's take a look at the Aussie once more, right? The RBA is expected to maintain its cash rate on hold at 4.35%, and that would potentially provide a near-term floor for the Aussie at around its pivot at 63.49. We also have the Bank of Canada coming up on Wednesday, 11th of December, where they are expected to make a 25 basis point rate cut, which is likely to keep the dollar CAD elevated and test this pivot level here at 1.4220. And we also have the Swiss National Bank making another consecutive rate cut on Thursday, which is going to be on Thursday is going to be 12th of December, right? Yep, so take note of that. Oh no, 13th. What is it? Let me take a quick look. It's going to be 12th of December. Yep. And we can probably expect the dollar franc to remain elevated as well. And finally, the euro, following the ECB will make its monetary policy statement announcement after the Swiss National Bank, and that's on Thursday as well, 12th of December. Alright, okay, so with that, we've covered the major currency pairs, we've covered Bitcoin, dollar index, we've also covered gold. Now let's move on over to crude oil, and then we'll touch on the indices as well. Alright, so looking at crude oil, right, we can see that this commodity, right, has actually, if you zoom out a little bit, we can see that this commodity has been in a pretty strong downtrend, right, since 5th of April. But of course, we've seen strong retracements to the upside as well, right? We've seen significant swings, right? We are able to identify significant swing highs, swing lows, another significant swing high, swing lows, right? Which shows us the level of volatility in this commodity, right? We can see this significant swings also represent the large fluctuations in either directions, right? We can see large fluctuations in either directions. highlighting the ongoing volatility for this commodity here, right? For example, from 8th of April till 4th of June, we can see crude oil dropping nearly 17%, and then it reversed sharply, right? From it reversed sharply from mid first week of June till the first week of July, gaining 15.5%, and then reversing once more to drop 14%, and so on and so forth. So you can see the fluctuations have been large and the swings have been very significant as well, right? Highlighting the current ongoing high volatility for this commodity. So crude prices have been selling off for most parts of last week. So if you look at it on the weekly time frame, right, we can see that crude prices, XTI USD is the instrument that tracks the WTI crude oil futures, and we can see that this instrument suffered its second consecutive weekly decline, right? And especially on Wednesday onwards, right? Crude oil, WTI oil, right, stalled around $70.10 per barrel, and it fell very sharply on Friday, 6th of December. Right, it is approaching the pivot level at $66.22. This pivot level here is actually a very significant multi-swing low support, right, that has been in place since December 2021. Right, so if you look at it on a weekly time frame, this is a very significant support level. Right, we can see crude oil bouncing off this level several times. Right, we see a nice, of course, the first swing low support taking place at the end of November 2021. Another swing low support taking place in March of 2023, another swing low support here 1st of May 2023, support once more in June of 2023, and then another swing low support here December 2023, and of course support level since September 2024 as well. So you can see this is a very significant multi-swing low support at $66.22, which has been identified as the pivot level. And we can see crude oil price. We can expect crude oil prices to continue sliding lower towards this level as markets reopen. And beyond the pivot, there's another support level at $61.98. This is also a strong support level, right? We see a nice swing low taking place here in August 2021, and then another swing low support taking place in November as well, right? So very significant levels for crude oil here. All right, coming back to the daily. All right, so this is how we've identified the pivot and the first support for XTI USD. Remember, XTI USD is the instrument that tracks the WTI crude oil futures, and we've seen crude oil sell off sharply since last Wednesday, and it's quite likely this commodity is going to drift lower towards the pivot at $66.22, where it could stabilize once more. Right, in terms of resistance, right, we saw crude prices stall on Tuesday and Wednesday at around $70.10 per barrel. Right, so this is where we can expect the first resistance to sit at. And first support and the pivot level is a multi-swing low support at $66.22. And the first support is $61.98 per barrel is also another significant swing low support. So remember, if you switch on over to the weekly time frame, we can see how strong these support levels are and how far they stretch back as well. Right, for the first support, it stretches all the way back to May of 2021, and for the pivot, it stretches all the way back to November of 2021. Alright, so now let's move on over to the indices, right? And as we approach the tail end of today's webinar, right, if you have any other requests for any of the other instruments, please do drop them in the text box here or the chat box. I'll be more than happy to go through the analysis with you. Otherwise, let's move on over to the indices, and we can wrap things up shortly. Right, so let's take a look at US 30. US 30 is the instrument that tracks the Dow Jones futures, and we can see that the latest intraday all-time high, I believe, was made on let me see, when was the actual intraday high made? Was it 29th November? Right, okay, the intraday all-time high, the latest intraday all-time high for US 30 was made on Wednesday, 4th of December, and it's at 45,105. Right, so the latest intraday all-time high was formed, and then since Thursday 5th of December we've seen this index pull back, right, and it's falling towards what I see is a pullback support level at 44,327. This level here previously was a significant swing high resistance that took place on Monday 11th of November, and after the bullish breakout took place on Monday 25th of November, this swing high resistance can now potentially function as a pullback support level, which is also accompanied by a 38.2% Fibonacci retracement. So the pivot level is a pullback support that's accompanied by a Fibonacci retracement at 38.2%. This retracement was found starting from this swing low on 19th of November, going up to the intraday all-time high that was formed on Wednesday 4th of December. Looking a little bit below at 43,308 as a nice overlap level, right, we can see once again a nice swing high resistance being formed on Friday 18th of October at around 43,308 and 8, and after this bullish breakout took place on Wednesday 6th of November, this level then proceeded to function as a pretty decent swing low support on 19th and 20th of November. So this then creates a nice overlap level, which is accompanied by not one but two Fibonacci retracements, right? The first retracement level at 50% was found starting from here, right, this swing low on 4th of November, going up to the intraday high on 4th of December. So that's how the 50% Fibonacci retracement was found, and the 38.2% retracement was found starting from this swing low on 11th of September, and once again going up to the intraday high on Wednesday 4th of December. So the first support is a nice overlap level that's accompanied by a Fibonacci confluence. A Fibonacci confluence simply means we have more than one Fibonacci level at this particular price zone, and in this case is the 38.2% and 50% retracements. And in terms of resistance of course is at 45,042, which is close to where the intraday all-time high was formed. This is probably going to turn out to be a nice swing high resistance as well, should we see the US 30 drift lower towards the pivot level here. Alright, so these are the key levels for US 30. So as markets reopen today, we can probably expect this index to continue to slide lower, and it could stabilize at around the pivot level at 44,327. This is a nice pullback support that's accompanied by a Fibonacci retracement at 38.2%. Right, let's move on over to D40. Right, D40 is the instrument that tracks the DAX futures, and we can see that the DAX has broken out of its prior all-time high. Right, the prior intraday all-time high for the DAX was formed on Thursday 17th of October. Right, this was a nice swing high resistance that had been in place since 17th of October, and we saw a nice bullish breakout take place on Monday 2nd of December. So with this bullish breakout taking place, this swing high resistance can now potentially function as a pullback support level at 19,681. So that's how the first support has been identified. And with this index racing to new all-time highs, right, the latest intraday all-time high for the DAX was formed last Friday 6th of December, and that's at around 20,430. Right, and so in such a scenario, right, we're going to be relying on Fibonacci tools such as projections and extensions. So we've we've relied on a Fibonacci projection to help us identify the pivot and the first resistance. So this projection level began from this swing low on 5th of August 2024, going up to 0.2, which is this high on 17th of October, and ending at 0.3, which is this low here on the 19th of October. We can see that the 61.8% projection level sits at 20,460, and the 78.6% Fibonacci projection level sits at 20,906. So this is how we've identified the pivot and the first resistance. So with the 40 rising very strongly since the bullish breakout took place in the beginning of December, right, we can probably expect this index to probably stall at around the pivot, maybe take a little bit of a breather. I don't know if it's going to pull back all the way down towards the first support here, but after such a strong run up since the bullish breakout took place on Monday 2nd of December, perhaps we could see this index stall at around the 61.8% Fibonacci projection, right, as we're expecting US 30 to continue to slide lower. Perhaps that's going to have an impact on the European indices as well, and we can probably expect the DAX to stall around the pivot here at 20,460. Alright, so now moving over to US 500. Right, US 500 also made its latest intraday high, intraday all-time high on Friday, 6th of December, and it's at 6,099.90. Right, so you can probably expect, right, once again, should we see US indices pull back, right, especially with DAX already pulling back since last Thursday, perhaps we can also see the US 500 pull back as well. And then what I see is here a nice overlap level at 6,009, right? It's a nice overlap level at 6,009. Previously, this level functioned as a strong swing high resistance on Monday, 11th of November. Then we saw it run into resistance once more at the end of November, and then support as well on 28th of November, creating a pretty decent overlap level that's accompanied by a Fibonacci retracement at 23.6%. This 23.6% retracement was found starting from here. Oh, sorry, it's at 38.2%. Apologies, this is a 38.2% retracement level. I'm looking at the 38.2 retracement level first. This 38.2% retracement level was found starting from this swing low here on 19th of November, going up to the intraday all-time high on Friday, 6th of December. That's how we found the 38.2% retracement. We also have another Fibonacci retracement at 23.6%. This was found by starting from this swing low on 4th of November, going up to the intraday all-time high on 6th of November. So once again, the pivot level at 6,009 is a nice overlap support that's accompanied by a Fibonacci confluence that consists of the 23.6% Fibonacci retracement and 38.2% retracement. And looking a little bit below, right, there's another overlap support at 5,867, right? This is a nice overlap support level here. We can see US 500 running the resistance from 14 October till 30th of October, right, forming a pretty decent swing high here as well, right? And then after that, after the bullish breakout took place on Wednesday, 6th of November, right, we see this swing high resistance then proceeding to function as a nice support level, creating a nice swing low bounce here in mid-November here. So this is a very nice overlap support at 5,867, which is also accompanied by a Fibonacci retracement at 23.6%. This retracement was found starting from this swing low on Monday, 5th of August, going up to the intraday all-time high on Friday, 6th of December. Right, so US equities along with the DAX has continued to climb higher, making new intraday all-time highs along the way. So in this case, for the US 500, we're relying on a Fibonacci projection of 100% to help us identify the next potential resistance barrier, and that resistance barrier comes in at 6,164. So this projection level was found starting from point 1 on Monday, 4th of November, going up to point 2, 11th of November, and ending at point 3, which is on the 19th. Right, so you can see a strong uptrend for US 500 as well. And we have a very pretty decent ascending trend line as well here, right? So we also have this intersection of the ascending trend line, the pivot, which is an overlap support, and the 23.6% Fibonacci retracement, helping us identify a pretty strong pullback support level here. So should we see US 500 drift down towards this intersection of the ascending trend line, the pivot level, and which is the overlap support, and the 23.6% Fibonacci retracement, right? And if it does stall around this level or stabilize around this level here, it helps us identify a potential rebound, right? This could be a potential rebound area for US 500 for this week as this week develops. All right, okay. As we approach the end of today's webinar, is there any other requests? Right, we still have a little bit of time, so I can probably cover one more analysis should there be one. Otherwise, we'll just do a quick recap of what's coming up this week. And also, I'm going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll wrap up the session with a quick recap. Right, thanks Nick. Yep, and as usual, right guys, don't forget to smash the like button as well. Truly appreciate it if you guys could smash the like button, as well as giving your feedback with regards to today's webinar as well. Right, okay, so let's do a quick recap. Right, so as I mentioned, right, we've got a hat trick of central bank announcements coming up this week, and sandwich in between, we also have US consumer inflation data. So up first, we have the RBA on Tuesday, 10th of December, where they're expected to maintain the cash rate at 4.35% once more. This could cause the Aussie to stabilize, right, and find a near-term support, right, especially if we do see Governor Michelle Bullock deliver a pretty hawkish press conference. That's likely to create some stabilization for the Aussie after selling off sharply over the last few weeks. We also have inflation and producer CPI data and PPI data out of China on Monday, today 1:30 a.m. GMT time. We also have OPEC meetings coming up beginning on Tuesday. Then we have US inflation data, CPI, coming up on Wednesday 1:30 p.m. GMT time, where we're expected to see headline CPI accelerate from 2.6 to 2.7%, while headline CPI is also anticipated to increase stronger than the previous month, rising 0.3%. Then we have the Bank of Canada making a 50 basis point cut, expected to make a 50 basis point cut on Wednesday, 2:45 p.m. GMT time. We can expect the loonie to significantly depreciate further on Wednesday, 11th of December, providing further tailwinds for the dollar CAD. Then on Thursday, we have the Swiss National Bank making a 25 basis point cut. I believe this is the third or fourth consecutive rate cut by the central bank, and we can also expect dollar franc to continue to climb higher. And finally, at 1:15 p.m. GMT time, the ECB is expected to make a 25 basis point cut in its main refinancing rate, bringing it down from 3.4% to 3.15%. And of course, we have ECB President Christine Lagarde delivering her press conference at 1:45 p.m. GMT. So take note, we've got a hat trick of central bank announcements, and we've also got a bunch of other data sandwiched in between, right? China consumer and producer inflation data, US consumer inflation data, as well as employment change out of Australia as well, and also PPI data for the US on Thursday, right? So take note, we've got a lot of things lined up for this week. We can definitely expect much higher volatility for the currency pairs that are involved, or for the currencies that are involved with this respective central bank announcements, right? So that's all I've got for today, right? Thanks everyone for tuning in to today's webinar. Do look out for all upcoming webinars brought to you by IC Markets for the rest of this week, right? We've got a combination of English, Thai and Bahasa webinars consisting of live analysis as well as educational topics. All right, thanks everyone, take care, have a great trading week, and catch you all at the next webinar.